everyone, welcome to Lendi's Property and Money Talks series. In today's discussion, we're going to be talking about interest rates. Before you roll your eyes, this is an important topic, and we have interest rates currently at the lowest they've been for over 60 years. So these are interest rates your grandparents weren't getting hold of. And I think it's really important with everything that's going on for us to really just talk about what does it mean to fix your interest rate? What's the implications of that on your home loan in general? So with me today to help answer some of these questions is Sam Hyman. And Sam is the Inside Sales Director here at Lendi, and he looks after a lot of our home loan specialists, and I think is best placed to help us answer. So welcome to the series, Sam.
Hi, Zara. Thanks for having me.
Well, let's just jump right into it, Sam. 2.09%, how low can you go on a fixed rate currently available today? Can you give us a bit of a lowdown on kind of where interest rates sit today in the market, and just your take on I suppose, the broad market today?
Yeah, sure. I think it's a really interesting time in the market right now, and what we are seeing is historically low interest rates, and this is really following on from 5 cash rate cuts that we've had since June 2019, and we had 2 this year alone in March. So one of the really interesting things that we haven't seen in the market for a while is a significant spread between variable rates and fixed rates. So we've got incredibly low rates, and the lowest one on the Lendi platform right now is sitting at a fixed rate at 2.09%. So all rates in today's market for an owner-occupied property should really start with a 2. And one of the things that we're seeing in terms of customer interest is that more and more customers are very interested in these low fixed rates because they are quite a significantly amount lower than the current variable rates in the market.
Yeah, I mean, anything starting with a 2. If I think about just 18 months ago when I was looking at the market, I think someone said if it starts with a high 3, you're doing well, and that's 18 months ago. So what do I do, Sam, if I did get my mortgage, let's say 18 months, 2 years ago?
Yeah.
I've got it on a variable, but I'm certainly not on a 2.09. What are the options available to me now based on it's only been 2 years since I sort of got my mortgage?
Yeah, I think, and I think we generally have this as a rule. I think every 6 to 12 months, it's really important to just simply do a little bit of research and look at to where your current interest rate and product sits within the market. So it's really easy to do online, and in a couple of minutes, you'll have a gauge of kind of what rates are out there in the market and how yours stacks up. So I think the first thing to do essentially is speak to your current lender, and especially if your current rate is higher than either the rate your lender's offering to new customers or the rate that many other lenders are offering to customers. And once that doesn't work, then it's time to look at other options and look at refinancing.
And what if I am already on a fixed rate? So that same mortgage I had isn't a variable; it's a fixed rate product. And again, I'm kind of 18 months in. What are the options available to me there?
Yeah, well, I think when you are breaking out of a fixed rate before the fixed rate expiry period, there is a break cost associated with that. And the calculation is different from lender to lender, and also depending on the current fixed rates that are available and current interest rates that are available in the market today. So the first point would really be to understand and get an estimate of what those break costs would be, so that you can start running the numbers and see, is this something worthwhile? Because what we are seeing today with historically low rates, there are certain break costs that it is definitely worthwhile because the rates are so low and the savings are so significant. The break costs are definitely worth breaking a lot of the time.
I actually saw on our platform, and then I've also just seen, in general life, there's a lot of pretty hefty cashback offers out there too. I think I heard somebody say that the banks are paying you to break if you can. But can you talk to us about cashback? I've always never been super clear on, is everybody eligible for those? How do you go about getting that?
Yeah, sure. So I think in the current times and with interest rates being so low, the great news for customers is it makes it a lot more competitive for banks, and essentially there are more and more banks offering more incentives for people to switch. And some of the incentives that banks have been offering have been cashback offers, somewhere between $2,000 and $4,000, even up to $4,000. Some lenders are even doing this per security. So if you've got multiple properties that you're looking to refinance, you can take advantage of that cashback offer multiple times in one transaction, essentially. So yeah, the cashback offers, there are a number of different cashback offers in the market right now. And again, that can make the benefit of refinancing much more attractive if you're getting paid to do so.
That's amazing. I mean, $4,000 per security is a pretty compelling reason to have a look at where you're at and make sure you're definitely on the best rate.
I think as well, just to add on, with those cashback offers, obviously they do have specific rules and requirements based on the scenario. So it's always best, you might see them advertised, but it's definitely best to speak to an expert. Just they'll talk you through the T's and C's and make sure you actually qualify based on your individual circumstances.
Yeah, good advice. And then just in terms of what you're seeing on the Lendi platform, are you seeing a big trend in people switching to a fixed rate product? I know we've been doing a lot of proactive conversations with some of our existing customer base around the potential to switch, but are we seeing people make that choice more often, or is there still a good breadth of variable and fixed rate?
Yeah, I think over the last few months, we've definitely seen an increasing number of customers opt in for fixed rates, just given the difference versus variable and fixed rates right now. So yeah, there are a significant amount more customers today and over the last few months, definitely looking at fixed rates. And I think it really comes down to these record low interest rates, and also the opinion of people in terms of what will happen with the cash rate over the next 12 to 24 months. I think are the two big factors. And I think also with fixed rates, in these times, a lot of people are looking for security and certainty, and that's something that a fixed rate offers customers. So yeah, it really depends again on the customer's individual circumstances, but there have definitely been more and more customers interested in fixed rates over the most recent few months.
And just one final question. You can still access these fixed rates. So I guess this is a question. So can you still access the fixed rate, but potentially split your loan so you're not 100% tied into the fixed rate, or is it all in or nothing?
Yeah, and that's a really good question. And I think something that a lot of our home loan specialists and consultants will talk to their customers about, because you can diversify your loan product and have a split that is variable and a split that's fixed, so that way you can leverage your risk and have a percentage of your loan that you know is secure and on a specific rate. And you can also have a part of your loan that's variable and have the other advantages that go with variable products, such as unlimited extra repayments and a bit more flexibility on that split of your home loan. So yeah, it is definitely something that a lot of customers are doing at the moment.
Awesome. Well, thanks so much, Sam. It was really great to chat through that today. It's really great, I think, just to get some clarity around these numbers, because you see a number like 2.09, and if you're sitting on an interest rate that's a 3, you know, it's like, what do I do to get hold of that? It's good to get some clarity on, you know, what to do next. And obviously Lendi's here to help if you want to jump on the platform, and within a few minutes you can see some options available to you based on your individual circumstances. So thanks again, Sam. To everyone who's watching, don't forget to subscribe to our channel, hit the bell, and then you'll get notified every time we upload new content. And if you have found this useful and you want a little bit more information in particular about how to start the conversation with your current lender around your particular interest rate or moving to a fixed rate, then check out one of our other videos, which is how to negotiate a lower interest rate. But thank you, Sam, for your time.
No worries.
And thank you everyone for joining us. We'll see you next time.